Hello and welcome to BloombergQuint. We are joining in this special broadcast to discuss Yes Bank's financial results for the quarter ended December 31st, and also to get a sense from the management as to what the bank is doing differently than what it was doing in the past. To take us through this conversation, we have with us Mr. Prashant Kumar, the MD and CEO of Yes Bank. Mr. Kumar, welcome on the show. Let me quickly get to certain questions with respect to the results. The bank reported about 151 crore worth of net profit during the third quarter, and this was largely aided by an increase in the net interest income. Just looking at it on a year-on-year basis, that's a 140% increase. Trying to get a sense of where this interest income is coming from. Is it because the book wasn't growing earlier and probably now, so there's additional interest income coming in?
So we are getting, say, contribution coming from two sides. One is in terms of fresh disbursement. Okay, so we have disbursed almost 12,000 crores in retail and MSME, and we have also disbursed fresh 2,000 crores in corporate loans also. Plus, if you have noticed, we have done a cash recovery in our NPAs to the extent of almost 1,500 crores during the quarter three, and out of which 1,250 plus has given us a P&L positive impact. So some part of the recovery has been also booked as an interest income. So that way we are getting a very I would say reasonable growth in the net interest income.
All right. Let me move on to the slightly less rosy parts of the book as far as the asset quality is concerned. Now, the reported number is 15.36% of gross NPA on the book. But you mentioned last week when you were announcing the results that if you take the Supreme Court's impact, the accounts which should have been NPA but were not classified as NPA, that would bring the gross pro forma NPA into about 20% sort of range. Just trying to get a sense of where the quality of the book stands as far as 20% gross NPA is concerned.
So I would agree with you. This is not a very rosy picture, but I think the most important thing, and that because of the COVID, if there is an impact on the overall economy, and definitely it would also be reflecting on the asset quality of the banks. So I think in these type of circumstances, the more important thing is how well you are prepared for them. So what we have done, we have made a COVID-related provisions of more than 2,600, which is sufficient to take care of the provisioning requirement on the potential restructuring book as well as on the probable NPAs. And we have also already made very adequate provisioning on our existing NPA and NPI. So going forward, there would not be any requirement to make any additional provisions on our existing NPA book. That is adequately provided. And even the potential part has been taken care. So I think with the improvement in the economy, and at least our assumption is that we are at the peak of our stress. And this assumption is based on certain indicators. One indicator is in terms of collection efficiency. We have already reached to 96% as compared to 97% pre-COVID. The check bounce rate has also improved from peak of 18% to almost 9%. And we are seeing the throughputs in our account reaching to the pre-COVID levels. So I think these are very strong indicators in terms of the stress in our stock has reached to a peak, and now going onwards, it would be a reduction.
Okay. I'm just going to put a little more emphasis on this gross NPA part of the book. So, yes, 29,500 roughly crore worth of gross NPAs on the book. But you've also declared, as part of the results, you've declared about 18,551 crore worth of loans, which includes your Supreme Court impact, and it includes any standard accounts which may have seen delays in repayments. Just trying to get a sense, because if you were to look at how the book has progressed since March 2020, it would seem that the progress that you made last year seems to have gotten impacted due to COVID largely, but it seems to be that the stress is back at where it was, because we did just a back of the envelope math, about 48,000 crore that works out to, including gross NPA and the stress portfolio.
No, I think we need to say acknowledge this part when there is an overall contraction in the GDP of the country, and if we think like the banks would not be impacted, at least this is beyond my comprehension. So, if there is a GDP contraction, there are certain sectors in the economy which have been severely impacted because of the COVID. So, any bank which would be having exposure in those kind of assets, there would be definitely stress in those sectors. So that's why I was sharing. The more important thing would be whether you have prepared for this or not. So I think with a very good operating profits and the recoveries, we have been able to make the adequate provisionings for these kind of eventualities.
Would you characterize a lot of the existing stress as something that got added during your tenure at the bank, or is it something that more to do with the legacy book?
So it is with the legacy book because if you see like after March, in the first 2 quarters, there was hardly any credit disbursement. So credit disbursement started in quarter 2, a very small one, but it was mostly in the quarter 3. So whatever we are seeing is in terms of COVID impact on our legacy book.
Okay. Coming to the provisions part of the story, you said you already hold high provisions. I was just looking at through the numbers. 77% PCR is against the gross NPA. But if you were to include the other components of the stressed portfolio, that works out about 69% roughly PCR. Just trying to get a sense. Are you comfortable with this 2,600 crore pool that you've created for COVID-related assets? That is going to be enough to cover for any losses? Do you think that maybe in the coming few quarters you'll have to make more?
No, so there are two factors for this. First, this kind of pool, which is under standstill NPAs, they would not be that sticky NPAs as compared to the previous one. So these are more temporary things because of the COVID impact. And once there would be improvement, which we are seeing, I think resolution of those NPAs would be much faster. So as of now, the provisioning is sufficient, but definitely going forward, if there is any requirement, we would continue. Our strategy is to always build up adequate provisioning so that the future earnings should not be having the impact from the past. And I think this is what we are doing in the last 3-4 quarters.
Okay. Your board also approved about a 10,000 crore worth of fundraise, in the coming year. Just trying to get a sense as to, when exactly are you looking to raise this money? And secondly, what exactly is this fund going to help you do? Is it like largely to protect yourself against any future COVID impact, or possibly fund faster growth? What is it?
So for any fundraise, actually you require approval from the shareholders. So what we found out that we are not having the shareholders approval for any subsequent fundraise. So this is just a enabling provision which we have taken from the board because now we will go to the shareholders, which takes a longer time. So it's just an enabling provision. Bank is very well capitalized, and as of now, we don't see any need to raise any further capital.
Okay, sir. Also trying to get a sense as far as loan growth is concerned. Now, during the media interaction last week, you indicated about a 10% aggregate loan portfolio growth in the next financial year. I mean, this financial year is more or less done. As far as you're concerned, where is this growth going to come from? Is there specific areas? You said about 2,000 crore you disbursed during the third quarter to the corporate loan book. Is that something that you're looking to grow further?
So we would like to grow in all the sectors, but definitely focus would be more on the retail and MSME. On retail and MSME, we are seeing the demand also, which is coming up on both the sectors. On the corporate issue is that the demand is also not there. Okay, so if there is a demand, we would like to grow there also, but our strategy is in terms of more granular. So we would like to say participate in the working capital requirement of the corporates, and also if there is a small term loan requirement. But definitely we will not be going for the large project loans.
Okay. As far as your corporate loan growth is concerned, trying to get a sense of, already there's plenty of stress on the book from the corporate pool. Growth prospects would include what? I mean, what are the kind of accounts that you'd be comfortable extending loans to?
So there are, say, corporates in different sectors where the participation in the working capital makes sense because we already have their cash management with us. So wherever the cash management is with us, we have a clear-cut visibility on their cash flows. So for those corporates participating in a small amount in the working capital consortium is absolutely safe.
Okay. The RBI's norms would not affect that?
So I think once we would be there, then the cash management would continue with us.
Okay, fair enough, sir. Just one in one statement, if you could tell us how the market should view the bank's loan book, inclusive of stress, inclusive of potential growth areas, etc. How should they read this? Because the numbers pretty much, because of various dispensations that have come in over the last year, the numbers look a little muddled. So if you could just clarify that, sir.
No, I think we have been very transparent in disclosing our numbers. We have given the numbers of those accounts where the restructuring has been invoked and likely to be implemented. We have also given the numbers in terms of the accounts which is overdue for more than 90 days. And we have also given numbers in terms of accounts which are overdue for more than 60 days and more than 30 days. So we have been very transparent. And what we are seeing that anything which is overdue between 30 to 60 days, it is something which is a very, very normal phenomena which happens with all the banks because the customers always pay with a lag. The issue is only about the standstill NPS, and maybe some portion of overdue between 60 to 90 days may also slip into NPA if there is not sufficient improvement from the COVID side. So I think that's why our feeling is that we are at the peak, and now onwards it would be only a reduction.
Okay, fair enough. Last couple of questions. Just wanted to get your sense on the ARC structure that you were proposing last year to take the stress portfolio of the bank outside the bank's book. Where has that reached? How far are you in the process of setting that up? Or is that an idea that probably can be looked at later? It's probably in the back burner.
No, I think we are very serious about the whole concept because what we want to do, we want to set up a entity as a ARC where we can transfer the entire pool of our stress asset at a fair market valuation. We would like this entity to be run by professionals and also at an arm's length distance. So this entity would help not only for resolution of stress asset of Yes Bank, but going forward, this can also help in resolution of the similar accounts of other banks also. So at this stage of time, we are waiting for regulatory approvals. And once the regulatory approvals are there, I think we would be in a position to roll it out. A lot of investors on the stress asset side, both international and domestic, they have shown their interest in participating in this structure.
Okay, sir. Lastly, just as part of your this question answer session, I just wanted to understand what, as far as your digital strategy is concerned, because that is something that Yes Bank has been pushing hard in the last few years. You are one of the top banks as far as UPI is concerned. Does that continue? Are you looking at anything new?
So what we are doing, that bank is very strong on the transaction side. Now we would like to take these digital capabilities on our credit underwriting. So we have started the credit underwriting on the retail and MSME side. We have also entered into a deal with Salesforce, which would give us in terms of credit underwriting for the large retail and MSME loans on almost real-time basis. So our digital capabilities from the transaction, we are now taking it to the credit underwriting and also in terms of customer acquisition on the CASA side. So the whole journey of customer, whether this would be opening a deposit account or taking a loan from the bank or doing any transaction, we would like this to happen on the digital side.
All right, Mr. Kumar, thank you so much for joining us on this conversation. And we hope to talk to you again once the fourth quarter results are in and we get a fairer picture of what the pandemic has done to bank portfolios. Thank you so much for joining.
Thank you so much.